So yesterday's CPI report revealed some alarming data that consumer prices are actually increasing despite all the aggressive monetary policy coming from the Federal Reserve. While some items like gasoline and used cars became cheaper during September, most things that are listed within that CPI report became more expensive. In fact, core inflation has now reached a 40-year high of 6.6%, while consumer prices are stuck painfully high with no signs of slowing down. Will the Fed raise interest rates by 75 basis points for the fourth consecutive time, or what about a 100-point basis rate hike? Is that still on the table? And how would the markets even react if we did see a 100-point hike? So in this video, we'll be answering these questions as well as everything you need to know about September's CPI report, and we'll also be going over some of the next major headlines happening within the crypto markets for today. If you do appreciate these market updates, be sure to like this video down below, subscribe if you haven't done so already, and let's get started. All right, so to break down the CPI report, it's official. We've topped about 8% inflation for a seventh straight month after September's CPI report was released. Now, the September CPI came out higher than expected at 8.2%, and that's an increase of about 0.4% month over month. What frightens people the most is taking a look at the core inflation, where core inflation has now gone up 0.6% month over month, which was also higher than expected and is now officially up about 6.6% from a year ago, which is at that 40-year high. Just in case you forgot, core inflation excludes the highly volatile items like food and energy. And if we take a look at the CPI specific report, we saw rent and shelter has now increased by 0.8%. We saw grocery prices went up about 0.7% month over month, and right now is higher about 13% since a year ago. And gasoline, good news here, had dropped another significant 4.9% in September, but reports are still showing that they are climbing up again, which is up about 7% in the past 4 weeks. And then on top of that, new vehicles have now jumped up about 0.7%, while used cars have dropped about 1.1%. With transportation services increasing about 1.9% in September, up about 14.6%, which is terrible since last year. And then after the CPI report was released, we saw a breaking announcement, which was made that Social Security benefits will increase by 8.7% in 2023, which will help retirees weather the surging inflation that pretty much shows little to no sign at this point of slowing down. Now, currently, we're seeing the biggest cost of living increase since 1981, where there was about an 11.3% bump in monthly benefits. And on average, Social Security checks will rise more than $140 a month starting in January. And roughly 70 million Americans, or about 25% of the US population right now, are considered those Social Security beneficiaries. So, it might be good for our older folks who are on a lot of those benefits, but right now this is reaffirming how bad it actually is within the United States, seeing inflation affecting us all around the map. Now, core inflation is one of the hardest to tame and control, and in most recent months, core inflation has now been the driver of these high CPI reports. Now, big thing to be on the lookout for is please brace yourself. It's like that brace yourself meme with the guy in the winter, because the next FOMC meeting, we could be expecting to see another 100 basis point rate hike, where a lot of Wall Street analysts are pricing that into the market. Now, if you guys want to do a little bit of homework on the side, I would recommend you to research the state of the economy back in the early 1980s. And this is when America's interest rates and inflation peaked due to horrible political policies coming from President Jimmy Carter's administration, where in today's economy, we're seeing increasingly high similar reports of that 40-year high CPI and the core CPI rate. And what worries me the most right now as an investor is because 40 years ago, inflation reached a high of 14%, and interest rates also went up high as 18%. What's really ironic about all of this is that initially, when the CPI report came out, we also saw Wall Street indexes going down and crypto going down. But now, on this opening day, we've seen it go even higher. The S&P 500 is up about 2%. NASDAQ is up 2%. Dow Jones went up nearly 5%. And Bitcoin was back up over 1%. I've been trying to find some meaning through all of this, because if we're getting this priced into the market with high inflation and high interest rates coming about, we should be seeing the markets drop even more. But it looks like funny things are happening, and it looks like just volatility is getting priced in, and I'm not sure if we may see another dip in the market happening soon, but at least for now in the short-term price action, today it looks like things are looking a little bit better in terms of that price action. Now, in terms of the next headlines, the SEC is now investigating Yuga Labs. So Yuga Labs is the creator of the popular Bored Ape Yacht Club collection NFTs, where they are now on the debate on whether they sold digital assets which may have violated a federal law, because SEC right now is examining whether those certain NFTs are more akin to stocks and should be following the same disclosure rules. Not only that, but the Wall Street regulators right now are closely examining the distribution of ApeCoin, which was also launched earlier this year and was given to holders of Bored Ape Yacht Club, and a lot of people ended up buying that asset too. Now, just to be clear though, even though you guys might see some headlines that, SEC is investigating them, we have not actually seen Yuga Labs do anything wrong. They are just right now being accused of some potential wrongdoings, and the opening of an SEC probe doesn't mean the agency will actually sue the firm. Now, the investigation is just the latest attempt by the SEC chairman, Gary Gensler, to ensure that the crypto market adheres to its regulations. Yuga Labs is the forefront of the NFT world just because they are in charge of Bored Ape Yacht Club, which is the biggest NFT project even through this bear market. And I will know it is just crazy to see that even amidst this bear market, the Bored Ape Yacht Club collection has still not fallen under the $100,000 floor. So a lot of these JPEGs that many people were still skeptical of is almost in essence holding even more value than some of the other assets that we've seen depreciate a ton. Going back into the top line of the story though, while the Yuga Labs investigation got a lot of attention, there's still a lot and several other reports claiming that the investigation is just part of the entire SEC probe, where they want to go into the wider NFT market, they want to crack down on crypto, they want to put more fear into some of these other companies so that maybe in the future they navigate more accordingly, or they know that the SEC is the big boss in its play and you don't want to mess with them. It's like a mob gangster type mentality, and the government often does this in order to maintain their power. So the main question here though is the SEC really trying to figure out whether or not NFTs are a security? Can ApeCoin really be considered that security too? To give you my opinion, the SEC has already made up their minds and they're trying to label everything as that security, and they will probably try to label both Bored Ape Yacht Club NFTs and ApeCoin as what that is. And it seems like to me, the more assets that Gary Gensler can label as a security, the more cash that the SEC can then bring in. Keep in mind, the SEC also went for XRP, and they are still amidst that lawsuit, but it looks like XRP has been standing their ground, and I don't think the government expected for them to be holding up to a lot of these attacks, but hopefully we're able to find a resolution and fair justice to one of these crypto projects, because when the SEC is just going out like throwing their cards at everyone and all these projects, they're going to continue doing this until someone is like, all right, this has been unjustified and this has been spread out, and I think it would be a win for the crypto community in the long run. Next headline, Google taps Coinbase to bring crypto payments to its cloud services. So earlier this past week, Google had just announced a new partnership with Coinbase that will allow customers to pay for cloud services using Bitcoin and Ethereum, and in return, Coinbase will move a portion of their data-related applications over to Google Cloud instead of using Amazon Web Services. Now, this here is huge news just because in 2021 alone, Google brought in over $21 billion from their cloud services, and cloud data storage is a necessity for many people and companies all around the world, and its demand is still increasing. In the beginning, I think, there might have been 10 available cryptocurrencies that Google would allow as payment methods, but right now, this is a great start, and I'm sure in the future, they're going to add more tokens to it. So, if you want to buy something off of Google or have a website where it's like Google payment options, imagine being able to buy it with your favorite cryptocurrency. Now, with Google also touching more into the crypto world, it could also be a little bit of a scarier future just because crypto is known to be decentralized. Google is very centralized, and I think if they do come to merge it, they could find themselves wanting to dominate the industry, and I do think they have full potential to do that. On top of that, the big headline was also the fact that now you can search Ethereum addresses on Google. So Google came out with a new crypto feature which enables some Ethereum wallet addresses to have their Ether balances tracked straight off of the Google search search engine. Normally, you would need to use websites like Etherscan in order to track these type of addresses, but it looks like right now Google is making crypto become a bit more mainstream. Now, the argument though is that people who have Bitcoin aren't able to see the same functionality. This is just with Ethereum at the moment. So hopefully in the future, we can see this getting applied to other cryptocurrencies. Now, nonetheless, this is still great news, and it's showing the recent efforts suggested by Google in playing a key role in onboarding more internet users to the world of blockchain-based services and Web3. Now, it was also reported just about 2 days ago that Best Buy and Target and a lot of these other consumer electric retail stores are now allowing you to buy crypto wallets direct in person. So I think even through this bear market, we're seeing a lot of collaborations happening within the decentralized world. We're seeing a lot of these companies and a lot of these store forefronts really just accepting the normality of crypto, whether it's Google, whether it's Ledger going into like Target, Best Buy. I think over time, we're going to continue to build. We're going to see this collaborations happening. We're seeing fast food restaurants allowing people to use crypto as payment. And I do think in the next bull run, or when interest rates and inflation come to a stop and things start recovering within the markets, then at that point, we could really see all these efforts getting priced into the market. Now, if you guys did enjoy today's video, be sure to drop a like down below, subscribe to the channel if you haven't done so already. Check out the links down below in the description if you haven't done so already. Now, if you guys made it all the way till the end, comment down below the word poodle, and I'll see y'all soon. Peace.